Hear and see me, that's always a good start. And if you'd be kind enough to let us know in the chat box, that would be fantastic. Thank you. Great to see so many of you here joining us today for our Admiral's Hot Topic webinar on riding the commodities boom. And if you'll bear with us, we'll look to begin in a couple of moments. Thanks. As I said, hope you can all hear me, hope you can see me. Welcome today, both those of you joining us in our Zoom session today and also joining us live on our YouTube streaming. Welcome to the Admiral's Trading Spotlight Hot Topic webinar for today, St. Patrick's Day. Welcome to all of the Irish in the audience, myself included. And today we're going to talk about the, how you can still ride the hot commodities boom, okay? As always, I appreciate we have a wide range of experience joining us today. So I appreciate we have absolute complete beginners through to people who've been trading for a long while and stuff. And so, it's always great to hear what, if any, experience you have yourself into trading commodities. We always really welcome that kind of feedback. And if you're watching this session on YouTube and you're finding it useful, please, by all means, give us a hit that like button, click on the subscribe, because there's actually tons of fantastic resources and material that Admirals will be pushing out to you. And if you have any questions, later, if you're watching this later on demand, please, put them in the either the commentary box or drop us a note at the details we'll provide at the end. And we're always happy to have your feedback or any particular questions, or maybe even thoughts you might have for future topics ideas. We're always fantastically interested to hear what would be of most help and useful to yourself. But as I said, it's great to have you all here. And what we'll do is we'll switch across to the charts now and actually have a look at today's main topic. Super. So, as I said, I hope you can all hear me, hope you can all see me. And today, ladies and gentlemen, what we're going to talk about is riding the commodity boom that we've seen over the last few months, and talk about, what happened there, why did it occur, and is it still possible to ride the bullish moves in certain commodities? And as I said, if you've got experience already of trading commodities, we'd love to hear it. Tell us what your own experience is. It always helps and makes for an interesting discussion and debate. So for those of you who are joining us, or have joined us for a while, or even joining us for our first session, you may have noticed that Admiral Market is now going through a rebranding to Admirals, okay? And it doesn't actually affect you as a customer. You still get the great sort of support and resources and engagement with the financial markets that you have, but just to be aware of the rebranding that we're going through at present. And as you can say, Admiral's there, a Forex and CFD broker with a wide range of instruments that you can trade through, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and allowing you to engage with markets using the world's most popular trading platforms, MT4 and MT5, and also the Admiral's Supreme Edition. If you've got any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So what are we going to talk about today? Well, we'll talk about overall about commodities markets, and in particular, how we can analyzing them using the sort of the standard simple tools that we have consistently sort of talked about and taught about here on the sort of the whole trading spotlight webinar theme. Just to sort of talk about how being aware of significant events within the commodities markets, and most importantly, we're going to look about talk about how they show up within the Admirals, both MT4 and MT5 platforms, and talk about how to build a kind of like a little commodities profile, admittedly on MT4, but equally it's valid for MT5. So however you particularly which platform you use to engage with the markets, it will actually be of beneficial and value to it, and we'll do that looking at live markets. So be sure to stay with us till the end so that we're able to you'll be able to sort of see how we look at the information that we'll talk about for the majority of our session. So for those who don't know me, my name's Paul. I've traded for many years, trading for funds and for high net worth clients. I tend to be a trend trader for longer term trading and a reversal, mean reversion trader for intraday style of trading. So, ladies and gentlemen, riding the commodities boom, okay? So, as the slide says there, the US election last November signaled a shift in US foreign policy from Mr. Trump's America First stance towards Mr. Biden's rest of the world too position. And, that's kind of a rule of thumb, big picture. With that, what we saw last year was a weakening of the US dollar, all right? And that created opportunities within the commodities markets, many of which those commodities markets had a boom, which we will look at in a few slides' time. The question for us is it still possible to ride that bullish commodity wave? Is there still opportunity there? And hopefully we'll be able to sort of demonstrate that in a few slides' times. So today we'll discuss the commodities markets and see what traders can learn from this experience and what they could actually focus on to help them ride the commodity boom. So as always, as I said, I appreciate we do have a wide range of people who join us in terms of experience. Some people may not actually have really any idea of what commodities trading, but as a sort of broad brush understanding and help with the understanding commodities and commodities trading with the Admirals. Remember that commodities can be grouped as follows. Okay, so you have what you'll be termed as the soft commodities, and invariably that's effectively it's produce. Okay, that's either either, as it says there, agricultural soft commodities, things like soybeans, wheat, cotton, sugar, orange juice, or livestock. So that can be things like cattle, lean hog, pork bellies, and feeder cattle. So they're known as the soft commodities. And then on the flip side, you'll have the hard commodities, okay? Hard commodities being effectively because they normally need to be mined or extracted out of the ground. It's hard to get to them. So in those groups, you're looking at things like energy. So of course, crude oil, natural gas, heating oil, gasoline, etc. And then you have the metals, gold, silver, copper, platinum, and palladium. So what we're going to do today is, I'm going to focus a little bit more on the soft commodities and on the energy side of the hard commodities. We'll touch upon gold and silver and copper, etc. But, we're already there's actually quite a lot of fantastic resource on the Admiral's website and also on the Admiral's YouTube channel that cover in particular about those kind of hard things like gold and silver. So we will touch on them. But what I want to do today is to make people aware of, other commodities that they may not necessarily have considered or may not necessarily have even looked at in terms of as trading instruments. So in an effort to help broaden your knowledge and experience about what is available and what you can look for. But it's just important to recognize that that there are hard and soft commodities which in themselves can actually be sort of grouped even further downwards, and it's just about understanding them as we're going to be talking about them for the rest of our session today. And one of the other things you have to remember, okay, when we're talking about commodities is that we have to still remember is that the US dollar, it remains the reserve currency of the world based on what is at the moment still the largest economy in the world, namely the United States of America. So what you'll find is most commodities are priced in US dollar, both soft and hard commodities. So what that means is that all countries need to hold some US dollars in order to help facilitate commodities purchases and other global trades. All right, so that becomes key. That becomes, it's important to understand that, okay? And then when you look in terms of, certainly in the FX world, over 50% of FX trades will involve the US dollar. Therefore, the US dollar is keenly watched to see what, if any, impacts it will have on the commodities market. So it's just important, if you're new to commodity trading, it's important for you to understand that. Okay, it's important for you to have a grasp on what the US dollar is doing, because that, in effect, will also have a huge impact on commodities themselves. So when we look at it, as we talked about a little bit a couple of slides ago, is that, with the inauguration of Joe Biden, we're going to see a significant shift in US domestic and also in foreign policy, which invariably will have a knock-on impact towards commodities, whether it be just simply in energy policy or in terms of the way that the US does trade throughout the world. Mr. Biden ran on a manifesto of cutting down the US reliance on oil or hydrocarbons, and in fact, he was talking about really, riding riding a sort of a boom of his own about switching across to renewable energy sources, effectively promising a green revolution. They talked about a Green New Deal. And when you think about that, when you read about that and understand that, at the first level, you might think, well, of course, that would mean that it'd be very bearish for oil and for oil companies, wouldn't you? You'd think, well, if that's what's going to happen, if that's the future, and markets are always, a discount mechanism for the future, well, you'd be thinking that would be kind of bearish for oil. So maybe we'll have a little look at oil in the future to see what the reality is like compared to the let's say, the politicians' rhetoric. However, whilst Mr. Biden formulates his policy, all right, whilst he works out what he's going to do, the world, okay, not only the US, but the global world has been dealing with not only the COVID pandemic, but also remember, which has kind of been forgotten about in everything that's happened this last year. There was a US-China trade deal signed just over a year ago in January 2020. And we also had a harsh winter in Texas, which we'll talk about a little bit later, because, of course, what that does is, how that has an impact on people in Texas, but also across the US. Well, then, of course, that also has an impact on things like domestic and foreign policy, as Mr. Biden has to try and draw up his view of how he wants to run the country for the next few years. So they're all elements that have had an impact upon not only the global world, but also on commodity and also on the US dollar itself. So to remind you, because so much has happened in this last year, is that people forget that the Chinese and the US signed what was supposed to be stage one of a trade deal back in January 2020, okay, which it was only 13, 14 months ago, but I appreciate may seem like a different lifetime again to all of us, okay, because of what we've been going through. And for those of you who might remember it, is that that leading up to that, it led to very strained relationships and tough negotiations over a couple of years between President Trump and President Xi in China. What we did see and what we did come out of it is that the deal committed China to boosting purchases in manufacturing, services, and energy by $200 billion over 2 years, okay, running to 2022, plus $50 billion worth of agricultural goods. So just bear that in mind, okay? $250 billion of agricultural, energy, okay, manufacturing, etc. That's not an insignificant sum to commit to purchasing. All of which will have had an impact on commodities, which we're about to look at and understand now. What is interesting is that after Mr. Biden's victory was confirmed, the first sort of message out from the Chinese Communist Party was to congratulate Biden and also to state that their first priority was to renegotiate the trade deal. And you'd have to ask the question, why would you want to do that? What would be of interest? Why would the Chinese Communist Party wish to renegotiate the trade deal? So that might be an interesting question to consider when we look at the charts and the markets themselves. But as I said, we've said over the last few slides, what we had is that the US dollar, regardless of what has happened over the last year or so, the US dollar, it remains the reserve currency of the world and is likely to do so at least for the next generation, maybe longer. They will not, that will not change overnight. So invariably, as I said, because we're thinking commodities, it's important for us to understand, well, what is the US dollar doing? Okay, because that has an impact. Commodities are priced in dollars. Also, debt is very often priced in US dollars as well. Okay, these things are important. So, of course, whether the US dollar is strong or weak can have a huge knock-on impact. And here we have a chart of the dollar index. Okay, the dollar index is effectively it's the dollar against the basket of currencies. Okay, so the basket of the major currencies. So predominantly it's a lot of the euro. Okay, but then also you've got sterling, Swiss franc, Japanese yen, Aussie, Canadian, and I think also the Scandi, the Swedish krona in there. Okay, it's the US dollar against the basket of currencies, and it gives us an indication of whether it's strong or weak. As I said, this is a weekly chart, and just using this just as to sort of set the scene, we've got let's bring up the old drawing tool here. So it's a weekly chart. Every candle is an equivalent of a week. And what we had here, you can probably see there was a fair bit of volatility here, ladies and gentlemen. That is, from sort of February, March of last year when the real COVID crisis kicked in. And we had, really quite huge volatile swings there, didn't we, on the dollar? Okay, so but effectively, we reached ourselves. Just move this over the way here. We reached a high there, okay, of just under 103, okay, 103, all right, which is a great number if you're holding lots of US dollars. Not so much, okay, if you hold debt priced in dollars, or you're effectively having to buy commodities which are priced in dollars. But what we saw last year, and hopefully it's quite clear in ourselves, is that we actually saw a real slide in the US dollar there. A real sort of a downwards channel there. Okay, and having, as I said, sort of tickled the soft underbelly of 103. Earlier this year, we got down to around about 89. Okay, so we dropped about 14 handles on the dollar index. Okay, now it's a little bit turning at the moment. Okay, but that's a different story for a different day. At the moment, what we're interested in is that really for about the last 10 months or so, as you can see yourself, we had a slide in the dollar. Okay, and that's important to know. Okay, that's important to know. If you're interested in commodities, and the dollar's getting weaker, well, does that help you or hinder you in your own particular, let's say, strategic commodity purchases? And we're gonna look at that in a little bit more depth now. Alongside that, okay, what we wanted to see is, we just talked a little bit earlier about China having committed to around about $250 billion worth of purchases. And at the same time, we've just seen that the dollar was weakening, and this is a chart of the US dollar against the Chinese yuan, the offshore yuan, and this is a monthly chart. And we saw on this previous slide that effectively around about kind of March, April, we saw a high there about 103. We also saw a high in the dollar against the Chinese yuan around about that time. Okay. Before look at what we've seen here. Okay, it's just effectively we had a real double top, which is a reversal pattern, and effectively having from being up around about 7.2, we've slid all the way down to about what was about sort of 6.4. Okay, so just think what has happened there. You've had the dollar weakening at the same time as the Chinese yuan strengthening. Okay, so if you've committed to lots of commodities purchases and the dollar is weakening and the Chinese yuan is strengthening, what impact do you think that might have had on the commodities markets? Okay, what impact do you think that could have had? Why, if you're looking at a hugely big strategic picture, and as I said, the dollar's weakening and the Chinese yuan is strengthening, what kind of effect is that going to have? How does that play out? Okay, how does that play out with regards to commodities? Well, ladies and gentlemen, we're about to look and have a find out now. So what we can do to help us is this is the CRB. Okay, it's created by sort of Thomson Reuters, and it is the commodities index. In the same way we had like kind of you've got the dollar index, this is the commodity index. Okay, and this is a monthly chart here. Okay, and it's an interesting chart, and it looks at as a basket of the entire commodities market. And as I said, this is a monthly chart here. Once again, bring up the drawing tool. So some of you may remember, okay, the great financial crash. Some of us traded through it, all right, many years ago. And what we can see here, for those of you who know what I talk about in terms of my own trading style, we had a real monthly chart. We had a real big monthly bearish engulfing key reversal candle before basically the index collapsed. It rallied up a little bit, but what we can see is that it was in a pretty much a downward trend, as I said, for years. Okay, you know, for maybe you might say for the last 10 years, we had been working in this kind of, we'd been building in this kind of sort of wedge pennant formation. And at the start of last year, the actual commodities collapsed. Okay, the commodities prices collapsed till around about March of April of last year. But look what's been going on. Okay, remember this is a monthly chart here. Okay, so you know from being down at around about 100, we have effectively the commodities index has, you can see for yourself. Okay, has basically built itself back up, and it's now trading around about 195, 193, just underneath the sort of the 200 round number, and also from this kind of a longer term trend line. So we've had a great run. Okay, we have had a great run, but looking at that on a longer term time frame, if we can get through this particular area, well then effectively then you're starting to look at levels of 220, 240, back up towards 300, etc. So, you know, that we've had a great run over the last 10 months, but there is the opportunity for it to run much, much further. And if we look at a couple of more of the charts on here to give us an idea, you know, what we can see is, I think next is, this is the weekly chart of that commodities index. And, you know, as I said, you can see it collapsed at the start of COVID, but then into early April, it turned around and has been, you can see for yourself, you can see for yourself there, it's been actually, you know, just a great trend there, hasn't it, for about the last 10, 12 months. Okay. You know, and really, you know, we've just had a super run. And as I said, I'd say we're at a bit of an inflection point here. Okay. You can see the price for the few weeks is going sideways as it's hit that much bigger, longer term trend line. We're underneath that sort of psychological number of 200. So it'll be interesting to watch. This is something to sort of add to your watch list in terms of being able to, you know, to keep an eye on the overall kind of overall commodities markets. Okay. But hopefully you'd agree that is quite a fascinating chart that we've had to look at there. Something really quite exciting. So, you know, kind of, as I've said, building this bigger picture, you know, the China, as part of its trade deal, had to commit to buying $250 billion worth of American goods, service products, etc. The dollar weakened, the Chinese yuan strengthened, and hopefully you can start to see, you know, where China and other countries started to play their hands. Okay, what we started to see was this huge boom. Okay, in towards the into commodities, and as we've just looked at that monthly chart, you know, yes, we've had a great run. There's actually a possibility for it to go much, much further. Okay, and hence why it's interesting for us to sort of take a view and start to add these to our watch list. And so kind of further in time, this is copper. Okay, copper futures, one of those hard commodities. Okay, metals, weekly chart here. And you know what we're doing is we're just continuing to sort of reinforce maybe the kind of story you've seen over those last few charts, namely that, you know, despite having a real kind of you know, a little bit of a COVID collapse, so to speak. Okay, you know, so from here kind of would have been around, started getting into February, we dropped down to kind of $2 on the copper, where we'd had a nice inverse head and shoulders before. But then actually you can see yourselves, okay, you know, from bottoming out to 2, okay, during the kind of COVID crash, you know, we've flung our way up here. Okay, someone's been buying a lot of copper over the last year, to the extent that, you know, we were up a couple of weeks ago, we were you know, trading at just over 4.37. You know, you have to think, who buys the amount of copper? The vast majority of it is bought by China. Where was it being bought from? The vast majority of it is being bought from Australia. So of course this had a huge impact on the Aussie dollar. So if you, and we might have a little look at that when we switch across to the live charts, you know, if you look at that chart there representing copper, is actually not too dissimilar to the chart of the Aussie dollar. So it's you know, there's further again, there are knock-on consequences and effects that that we need to be aware of. But hopefully you can see yourself that has just been that's been quite some move, quite some great trading during commodities and the commodity market over the last 10 months. We also had iron ore. Okay, and this is a contract. This is a weekly contract. Okay, iron ore, right? And you know what you can see is that you know, if you look at a much bigger screen, iron ore had effectively been kind of, prices had been drifting away until we put in this kind of, it's a bit of a scrappy inverse head and shoulders back in 2016, and price had been drifting up. But it fell, you know, just at the into the start of the COVID crisis, and then once again somebody's been buying. Okay, and we've gone from effectively sort of, you know, around about 80 up to like 170. Okay, we've doubled in price all right, over the last 10 months, okay? Once again, somebody's buying a lot of iron, all right, and somebody's buying that. So and you can have I'll give you a couple of guesses to think who might have been doing that. But what I want to do is just more and more build this picture for you that we've had this great commodities run. Whilst lots of people have been focusing on equities, okay, they've been focusing on crypto, focusing on other asset classes. Commodities has quietly and slowly over the last sort of it's 10 months or so been putting in an absolute storming performance. Absolutely fascinating. And this is another chart, okay? This is soybeans, okay? Soybeans. This was part of the phase one trade deal that China would, in fact, buy, huge amounts of soybeans. And you can see for yourself that is what has happened there. This is a monthly chart, okay? It's a monthly chart of soybeans, okay? And price had been a little bit of a descending triangle for a couple of years. It just been effectively just working its way down there, just falling away. But then once again, this kind of, February to April last year, what we saw was, a kind of a break of that trend line, huge, big, shift candle, huge, big amounts of buying. And then effectively that just ramped up, okay? And so you can see for yourself that that chart should hopefully give you, a fantastic graphic description of what has been going on in soybeans, and in across the whole commodity spectrum. It's not just been copper. It's been across both the hards and the softs, and it's been quite amazing to actually to watch. Even in cotton futures, once again, this is the monthly chart, okay? And having printed this huge big monthly bearish engulfing candle a couple of years ago, you can see we were actually in a quite a nice straightforward down into a sort of descending channel, but invariably, once again, wanted to tell you, kind of February to April of last year, we get a bottom, and price being down there at kind of 50 cents, we're pushing up to basically to highs there up above 9, just under 9.5, okay? And once again, as I said, that is just like a year's worth of work there. And it's just, as I said, it's the we're seeing commodities purchases across the board, right? Across the board, across all all individual instruments within those kind of commodities classes. All right, somebody's been buying an awful lot, okay? And and the price is represented in the charts. So, that was kind of interesting looking at some like hard and soft commodities, but then, let's also take a look at energy. Now, this chart is XLE, and it's the ETF chart of the energy sector for predominantly for the US. This is a weekly chart, okay? This starts to get interesting because you can see for yourself we've been in pretty much in a downtrend, a nice descending triangle, run into the start of 2020, and the COVID crash occurs, and you can see for yourself that actually price collapsed up down until that sort of March, April time. We had a little bit of a bounce, probably a dead cat bounce, before price drifted down again, and then printed this huge big W, this huge big double bottom. But what we can see here is price started to basically to move, okay? And I'm just going to focus on that particular candle. I would say that candle is probably sort of kind of 2nd of November, or maybe 9th of November, my apologies. And in fact, actually what you can see is actually the price, the kind of strength of that has just been effectively quite something over the last, say, 3 or 4 months. I would suggest that's from the sort of kind of the 9th of November, the week of 9th of November. What happened there? Well, what happened there was actually, some of you may remember, is that was where we had the first announcements about the vaccinations. And so this is the kind of the other element that has played into the kind of juiced up the commodities boom over the last few months, namely that, as vaccine announcements announcements about vaccine rollouts came out, what we started to see was invariably the market start to contend with, as vaccines rolled out, well, in fact, that would mean people would go back to work, economies would roll out, there would be demand for commodities, there'd be demand for all sorts of commodities, there'll be just demand in general. That is effectively sort of one of the things that has helped giving that XLE, the whole energy sector, a boost over the last 3 to 4 months. So, we've had COVID, we've had the US-China trade deal, okay, but also, as I said, is the kind of the vaccination rollout has given markets a little bit of a boost, a little bit of hope that invariably we might be turning the corner on this pandemic, and that actually businesses and such will look to reopen there. And if we look at this, across other charts, this is interesting. This is that XLE, the kind of energy sector, and this is it plotted against gold. Okay, which is interesting. Which, of course, is another commodity. So we've got gold versus energy. Which kind of an interesting sort of correlation. And what we've been seeing here is, as you can probably see for yourself, is that over about the last 2 years or so, we've seen an interesting kind of inverse correlation there with gold and energy. Now, of course, as the initial sort of COVID damage occurred, energy demand collapsed. Okay, as did the price. And what we saw there was, of course, gold prices, rallied up strongly because people wanted it, because, there was fear. People wanted, so of course, people would be buying gold, and there was difficulty in actually getting hold of physical silver and gold, which just invariably added to a bit of a price run. But as we've just discussed there, as they kind of had the sort of the change in the US election, and also the announcement of vaccine rollouts, that has given basically, the kind of economy a boost. And that has also had an impact on the price of gold. And what we've seen, if you look at a gold chart, is of course gold has come off those highs from sort of the latter half of last year. So it's kind of an interesting correlation there. So even though we've had commodities on a boom, you can see that energy and gold have had a kind of an inverse correlation there, and that's giving you that's kind of giving us a fantastic insight into how the market has viewed the COVID pandemic, especially over the last few months. And then we move on to looking at oil, and this WTI, West Texas Instruments oil, and it's a case of this is a daily chart. Okay, this is from I think it's from the Admiral's MT4 platform. You can see that has actually been in a fantastic trend. Okay, I always talk to traders about a good trend should leap off the charts at you. That is a good trend. That's an excellent trend. And what's of interest to us is this would really be looking at here. Okay, I'm looking at around here. Hopefully you can see that on your charts or on your screens. My apologies. Is that would have been around the 2nd of November, which was the US election. Remember what I said right at the start is that Mr. Biden came in. He'd been running on a manifesto that he was going to effectively, get rid of oil, going to end America's reliance on oil, switch across to a green revolution. Okay, and that he was pro renewable sources, energy sources, and against all the kind of dastardly old school oil and coal, hydrocarbons, okay, in any way, shape, or form. So there's been his rhetoric about what he wants to do, but what we can see here is the markets showing the reality of it, and that we've gone from prices being around there early 30s, okay, to up above 60. We were getting close to sort of doubling price over the last 4 or 5 months or so, and you can see that way. And now price with oil sits happily above $60 a barrel. And some of you might remember that we had a huge shock in the oil market back in what would have been April of last year, where in fact I think oil dropped to sort of, I think it was about minus $50 a barrel, wasn't it? Because effectively all the airlines, all the cars shut down, so there's a massive glut of oil, and the price collapsed. And the reason the price went negative is because actually they were struggling to find places to basically to hold the oil, to store the oil. And in less than a year, well, we can see that we can see how much that has changed. And once again, admittedly, that is part of as the vaccine rollout has occurred, well, then people see that will demand come back into the economies, and invariably that will have an impact on the demand for oil. And what we'll also see is effectively is that how it knocks that self out in terms of being able to sort of that will play itself out. We'll see over the next few months as actually will go on. Clearly unpopular. But what we can actually see is, part of that in terms of that commodity boom was when we look at, well, why has oil risen? What is it that has driven oil up? Well, as I said there, firstly, the kind of those vaccine rollouts mean that markets believe, economies will reopen and they'll need oil to get that started. There is a demand for oil regardless of what we might be being told by politicians. And also we had a harsh winter. In particular, some of you may remember, only a month or so ago, there was an experience of, Texas effectively went into kind of not only a pandemic lockdown, but also into a kind of a complete energy lockdown. And because of experience, Americans got to see those Texans struggling for power during those recent winter storms. Okay, and what we saw was there's images in the media effectively of frozen solar powers, frozen wind farms, etc. Okay, and Americans realized that wind farms and solar power might be nice and might make people feel good. You can't really yet be trusted to replace oil as your power generator in let's say in climatic extremes like that. So that is another reason that has effectively sort of kind of pulled the rug from underneath Mr. Biden's green credentials. And what I wanted to show here is also just a case of is that whilst it is possible to trade and invest in those commodities, what might actually be easy for some people is to look at almost like a second and third order consequence. Namely, you might not necessarily wish to or be able to trade oil directly, but what you could do, okay, is have exposure to this kind of commodity boom via some of the companies that are involved with it. So this is a CBS, this is a Chevron, okay, huge big American oil company. And what you might notice for those of you the kind of sharp-eyed amongst us is recognize that invariably what we're seeing there is that chart, that weekly chart doesn't look too dissimilar from the XLE chart, does it, from the which we looked at, which is the ETF of the energy sector. Big, COVID fall, bit of a dead cat bounce, and kind of grind our way down to what will be, the kind of the sort of double bottom there, and then this will effectively be, the kind of around the time of Biden's election win and the vaccine rollout or announcement of vaccine rollout, and that's what will happen, and that's what we've seen price moving there again. It's back up above 100, and now you'll be looking to see could that hold above that, and then will it actually move its way, continue to move its way up that based on the back of demand as economies open up and we go back to a version of normal. And for those of us in Europe, this is FP, what would be French Petroleum, Total, okay, and this is on the Admiral's platform, and once again, it's a big oil company, and effectively you can see that hopefully you can see the price action there is actually not that dissimilar from what Chevron's was like, what XLE's was like, the ETF. All of these big companies, they go up to make that ETF, so it's not really a shocker that actually the price is quite similar. Price actions are quite similar, and as I said, this offers different ways. Some people might want to sort of actively trade oil itself. Some people might wish to buy just the ETF XLE, okay, and if you go into the Admiral's Trading Spotlight webinar archive, you'll find a couple of videos in there from my colleagues, Marcus and Jens, talking about ETFs and how to operate with them. And as also, you might just want to basically, buy shares in Chevron or Total, or you might wish to actively trade the charts of these oil companies and use that as a way and means to get engagement with this commodities move. And on that theme of looking at companies that are taking advantage of this commodities boom, here's a fantastic chart. This is a weekly chart of Caterpillar. I'm going to presume most of you would know who Caterpillar are. If you don't, Caterpillar, they make how would you describe it? They make JCBs, diggers, heavy equipment for manufacturing, okay, for mining, for building, etc. They're just you go onto any building site in the world, and effectively there's going to be Caterpillar products on there in one form or another. And so this in itself, this is just another chart giving you a fantastic confirmation that having had the kind of the COVID crash down into sort of February, March, we had a kind of a nice double bottom there, and then you can see for yourself that actually that has just been quite astounding. Okay, it's been a quite astounding run there for Caterpillar there. Okay, from lows of around about 90, it's up now trading around $227. All right, so we've done over double, maybe 2.5 times already. Okay, so long as we continue to see that commodities boom, we watch that CRB chart, well, what you're going to see is effectively that is going to have a knock-on impact to companies like Caterpillar and other companies like oil companies, etc., that will actually have will do well out of increased demand for all commodities. So, how do you watch this? How do you basically keep an eye on this? How do you look to sort of add this into your own particular sort of trading ways and matrix? Well, the best and simplest way, okay, on the Admiral platforms, whether it be MT4, whether it be MT5, is to actually set up a profile that just focuses on commodities, like I have here. This is a screenshot from my own, and if we have time, we'll have a quick look at how I've set that up. But not unsurprisingly, it's just charts of commodities that are offered through Admirals that you can actually look to trade. So we have gold, Brent, okay, Brent, kind of UK oil, North Sea oil, palladium, natural gas, and then on my bottom I have silver, WTI, platinum, and then I would also have the dollar index. Okay, remember I'm interested in what's going on with the dollar, because of course I can see how that can have an impact on those commodities prices. So by setting up yourself a profile, it doesn't really matter whether it's MT5 or MT4. What you can actually do is be able to monitor these and actually start to see when we get correlated moves within those particular commodities. And then as I've shown on the charts, okay, and what we've shown is that the price action we've seen, it demonstrates a lot of the very similar kind of fractal repeating nature that we would look to see for in any particular chart. Okay, whether you're trading FX or equities or indices or cryptos or commodities. Once you've got a good understanding price action and how to trade that and trade that well, that will lend itself to basically being able to engage in any particular asset class or instrument. And so if you're still looking to try and understand price action a bit better, well then, as I say, there are some fantastic videos, okay, in the Admiral's Trading Spotlight YouTube channel that will give you fantastic views on how to understand price action, and you will see that what we've been teaching for the last 18 months is both time frame and instrument agnostic. Okay, it works as well on the Brent daily chart as it does on the 1 minute chart of pound against dollar. So in conclusion, ladies and gentlemen, the election of Joe Biden was due to herald in new foreign domestic policy from the US, which it undoubtedly is. However, some of the moves within the commodities markets had already begun off the back of the President Trump presidency phase 1 US-China trade deal. The CRB chart, okay, lets you track the demand for commodities. And so, you can find that across, most elements of the internet. So I would always ensure that you have that and you keep an eye on that. These moves, okay, that we've seen in the commodities so far were exacerbated by the decline in the US dollar during the second half of 2020, which, as hopefully you can understand and see, led to a huge buying spree of hard and soft commodities. Despite a proclaimed green revolution, there is clearly still demand for oil, as you can see from the price action chart there. And if you can't trade directly the commodities, or you don't wish to, well, then you could trade, either the ETFs or trade the companies that are associated with the commodities boom. And it's worth setting yourself up a commodities profile on either your MT4 or MT5 platform, so that you're able to just build this into your trading routine of being able to sort of just keep on top of what's going on commodities. We've got a minute or two left, so I'll quickly show you how my own profile is showing up on that, just to sort of draw a conclusion. As always, we appreciate that, as traders operating from home, you're always looking for more support, and you can get that from the exclusive Trading Spotlight community. If you'll find that, tradersyard.com/group/312, where you'll find myself, but in particular my colleagues Marcus and Jens. They're posting fantastic stuff every day that will help you with your trading. So don't forget to join us next time. You'll see it on Friday, okay? Join my colleague Jens, and he's going to understand bionic trading, right? How to combine discretionary and automated trading, including what is a bionic trader, combining human pattern recognition with the use of technology, and how to backtest a pattern. That's this Friday, 19th of March. Check your inbox for the webinar link, or head over to the Admiral Market or Admiral's site, where you'll be able to click on and register for the next session. I hope you found that useful. I hope that's given you some insight into what's been going on in commodities. It's not really been covered a great deal, but hopefully you can have seen that. You can see there's been some fantastic moves, okay, over the last 10 months or so. And it might well be that this is the start of a longer term boom that is occurring, and there'll be opportunities for you to sort of get yourself involved. If you wish to contact us, if you've got questions, okay, about this session or anything else, or suggestions for future sessions, then by all means, you can get in touch with us. Email global@admiralmarkets.com, YouTube, okay.com/Admiral Markets, where you'll find fantastic content, and equally on Facebook.com/Admiral Markets Global. So if you'll just bear with me 1 second, what we'll do is I'll just try and switch us across to the charts just for the last moment or two. Okay, hopefully just bear with me there a second, ladies and gentlemen. We'll have it up here. Super. I'm hoping you can still sort of see me there. Okay, hoping you still see the chart now. So as I say, what I have here is, as you can probably see on the bottom, is I just have a profile that is set up, okay, purely for commodities. And if you I have, well, you can see I have profiles set up for all sorts, from equities, indices, FX in total, early morning, but also, as I say, one for commodities. And so what you can do is just bring up a chart here, okay, that would allow you to just keep an eye on, the major commodities that are offered by Admirals for you to trade. So, as I said, I have, here in the top left, I have gold on the weekly chart. Okay, and beneath it, I have silver. And quite often we see relationships between gold and silver. My colleague Jens has done some pieces on that. So by all means, look out for those on either the YouTube channel or Traders Yard. There we have both. I have both the Brent oil, and also WTI oil there. So I'm able to sort of keep an eye on, what they're doing. And you can see for yourself that actually, they've just been in a fantastic trend. We're also, covering palladium and platinum here. Okay, palladium has been a little bit, as you can see, for the last few months. Okay, has been, just a little bit of a box, but we may get to see a break out of that. But you can see that the weekly overall trend has continued to be up. And platinum, okay, we can see for platinum, platinum has been just a great trend there. Yes, we've had a little bit of profit taking there, but that overall uptrend on the weekly chart is still to the upside on that. And then I said we'll have natural gas here, which we've not really touched on too much here, mainly because this is the weekly chart. Having done a really nice double bottom there last year, we had a great run up there. Okay, fantastic run in natural gas. But actually, over the last couple of months, you can see for yourself that the price action has been quite scratchy there. Okay, that's that's the best way I can describe it. Hopefully you can just see it's not exactly a very clear picture on that. And in my own trading, I'm happy to sort of let the market play out, okay, and let it show me its hand before I actually look to sort of engage with it. I don't try and fight markets. That is rarely a smart way to operate. So, ladies and gentlemen, to finish off, I hope you found that useful. Thanks very much for joining us, both in Zoom and on YouTube here. I hope you found that useful. I hope it's given you a bit of insight into commodities and also the kind of boom that we've been seeing over the last few months. As I said, it's flown under the radar a little bit, okay, whereas lots of the media attention has been on cryptos and on equities, but hopefully you can have seen there that we've had a great run, and it might well be the start of a longer term run that we can all sort of engage with and take part in that opportunity. As always, I wish you the very best of success in your own trading, ladies and gentlemen. I wish you well, and I look forward to seeing you on the on next Admirals webinar. Trade well and take care of yourselves. Thank you.